Hello and welcome again to the Charlworth HI European Market Neutral video for October 2021. So this was an interesting month. When actually we look at the longs and the shorts, they have quite different shape. Our best longs, with the exclusion perhaps of Watches of Switzerland, which I'll come on to in a minute, were generally in Europe. We had some very strong performance in the IT services and systems area, with both Dassault and Capgemini performing particularly strongly. After a long period in the doldrums for people like Capgemini, where they probably had too many IT professionals and not enough work and a lot of long-term margin pressure, that's kind of twisted around post-COVID. So a lot of people have got big IT projects, and Capgemini have 300,000 people they can employ effectively. So we feel this is quite an interesting longer-term growth story from here. Dassault, they're in all the right places at the right time. People are trying to tech up their capabilities. Puma had a good month, so generally growthy stuff was generally better this month, which was good to see. And Daimler, where we've come in with the truck spin out as one of the key thematics, and you'll recall we did pretty well in the Vivendi Universal Music spin out. We feel a similar situation emerging here in Daimler. So some good European longs that we're very happy with. Watches of Switzerland, another very strong performance. This has been a really good long-term investment for us. Purchased it by our UK team back at Float 2019 and has continued to perform strongly. Dominant player in European luxury watch retail, big in the UK, but a great growth story in the US, and luxury watch retail has been very solid through COVID. So interesting long book, European dominated, some good stories there that we feel have got 2 or 3 months to run, so quite encouraged by that. On the short side, we struggled to find too many good shorts in Europe, but actually in the UK we had some better ones, and there were some good roll-offs from things like ASOS, which the online retailer have been short of for a while. On the beach, likewise, online travel business. We've had this generally strong theme this year of, as global economies have reopened and European economies have reopened, generally the online retailers have had a tougher time. People have gone back to physical, and there's been a lot of confusion in the travel sector about who can go where and when, particularly in the UK, so that impacted on the beach and its growth prospects. ASOS, we've generally seen a slowdown in e-commerce, and some of the high expectations for e-commerce growth are extrapolated from last year, peak COVID, really aren't coming through, and clearly some of the valuations are now looking pretty exposed. Had a good travel short in Carnival, which was weak again, and BT has been weak because people are worried about more infrastructure competition in the UK. There's some activist noise in BT, so we're keeping very aware of that, and that may be a name that we look to close out in the future, given that it's delivered for us pretty strongly. So overall, pretty balanced portfolio in a quite difficult month for markets. We were very nervous, markets were very wobbly about inflation and rates again, and then markets recovered. Pretty much growthy, defensive dominated. So we had an interesting scenario where you could argue global markets were risk off but going up. And that's probably not a great shape for the strategy, but did well, I think, to get through that and come out intact. Looking forward into the year end, we think that theme will play on. We think maybe some of the risk on stocks will play a bit of catch up as people begin to look through the supply chain shortages, which have had a big negative impact on a lot of UK stocks in particular, but I think a lot of global stocks. As people look through the supply chain shortages and start to see things getting better. When we meet management teams, there aren't many teams we meet who don't see an improvement somewhere in their supply chain from lows over the summer and into the autumn, that actually one or two things are getting better. Could be a hiccup around Christmas, which is quite a UK theme, but generally getting into 22, we could be looking at an improving scenario, and I think that might improve sentiment as we go into the year end for equity markets. Thank you very much again for your support this month, and we look forward to reporting again into the Christmas period. Thank you.